Hey everyone, welcome back to the Scaling Podcast. I'm your host, Aaron Harper. Today I'm sitting down with Matthias Smith, founder of Pioneer Capital. Matthias is one of the sharpest guys I know when it comes to SBA financing. He and his team help buyers find the right bank, negotiate better terms, and get through the SBA loan process, which is a nightmare, without all the friction and headaches. Today, on this episode, we get into what it really takes to move the needle in today's lending environment, how to be competitive as a buyer for a business, and what you need to do to win in the SBA loan process.
On social media, Instagram and TikTok specifically, not to name any names, there are certain people that, they push the zero money down, all seller financing. And so, you have people where they're scrolling TikTok or Instagram, and they get this in their mind that, hey, anyone can go buy a business and put $0 in. It's not the case. It's not reality.
Yeah. We talk about why deal quality matters more than ever when it comes to the SBA and how founders can set themselves up to win even before they get into the SBA loan process. If you're thinking about acquiring a business or funding a new franchise, you'll want to hear this episode. Let's jump in. All right, Matthias, welcome to the Scaling Podcast, man. I'm excited to chat with you.
Aaron, thanks for having me here. Good to be with you.
Yeah. Well, I know we were just talking about kind of business acquisitions. I know that's your space. I know that's what you kind of like specialize in. There's a tremendous amount of overlap between what you do and what I do. And I thought today we could kind of just get into kind of your background and some of the viewpoints that you have around the searcher community and kind of just do a deep dive into some stuff. So why don't we start with, for the listeners who don't know you, who are you? What's Pioneer Capital? Like, kind of how'd you get started? Catch me up to speed.
Yeah, no, absolutely, Aaron. So Pioneer Capital Advisory is a company that I started 3 years ago, back in May of 2022, essentially to help with filling the need for business buyers on finding the right SBA financing for their deal and navigating the process with as minimal friction as possible from start to finish. And so currently we're a team of 7 people, so it's myself. So I've been in the SBA space for a decade, going back to March of 2015. Had the fortunate opportunity of working at 4 awesome banks prior to starting Pioneer. Spent time at Live Oak, was there back in 2021 as a closer. So basically, middle office guy working on deals from approval to closing. Byline Bank, another top 10 SBA bank. Spent 3.5 years there. And then 2 other kind of smaller banks based in Wisconsin. And then the other folks on my team, it's my chief operating officer, Valerie Stash. So she sits in Indianapolis. She's been in the SBA space for about a decade. She oversees kind of the operations, KPIs, and similar of the team. We have 2 salespeople on our team, Raphael and Alan, and then 3 analysts, one of whom is the director of credit, Pablo, and then also Romero and Fernanda. And so basically what we do is say that you, Aaron, are looking to buy a business. Maybe you're going to go under LOI in a commercial roofing business, and you're looking for, hypothetically, 70% SBA financing relative to total project cost, so purchase price of the business, plus everything else, working capital, SBA guarantee fee, attorney fee, financial due diligence. And let's say you're going to have the whole down payment come from cash, and your debt service coverage is 1.5. The question is, how do you find what banks are going to do your deal with the best credit terms, with the least friction, and the best experience as fast as possible? And so that's where me and my team come into the picture to help. But I'll just pause there.
Yeah, no, that's great. So, and you specialize in like million to 5 million EBITDA businesses, or is it million to 5 million revenue businesses?
$1 million to $5 million loan amount. And then so basically that's where we would be highly involved from the very start of the process all the way through to closing. For anyone listening, for any deal where it's up to $1 million for the loan amount, we'll basically help up to the point where the term sheets get pitched and the client decides what bank to go into underwriting with. And then we can take a back seat at that point and let the client work directly with the bank.
Okay. And when did you start Pioneer Capital?
May of 2022.
Nice. Okay, cool. And then, so are you essentially like, is the model that you are like, you're getting a part of the loan, or like, how does your, like, are you brokering the loan to the other different banks? Like, how does the model work?
Yeah, so the way the model works here, and phenomenal question, is most of the banks in this SBA space, not all of them, but the vast majority, after the loan closes, they'll pay a referral fee outside of the settlement or the closing costs for the loan, generally between 1 to 2.25% of the loan amount, for basically helping facilitate the process from start to finish. The reason that most banks do this, generally speaking, is that many of them will sell the government-backed portion of the loan, which is typically 75%, unless there's an international trade dimension to the loan, in which case it's 90%. They'll sell that on the secondary bond market and they'll get a profit, which can range up to, like 5.5 to 10% over par. So generally speaking, just to kind of, for the purpose of the listeners that might not be familiar with that nomenclature, if you have $1 million portion backed by the government, it'd be 55,000 to 100,000 of profit, and then the numbers go up from there.
Got it. Understood. So they pay that largely also because you're bringing them the business as well, so they don't have to pay acquisition. That's like more or less their acquisition cost.
Yeah, it's kind of analogous to example or analogies aren't perfect, but very much in the same way where if you're an insurance broker and you're paying the premium to the insurance company and they're kept giving a kickback, the difference there is like the premium. If you think about the premium analogous to the loan amount, the premium isn't all going to the insurance company, whereas in the SBA loan, nothing from that use of funds bucket goes to pay the referral fees. So that's kind of the differentiating factor there.
Got it. So where do you see most of your deals coming from? Like, where do you get most of your customers? Is it online? Is it referrals? Is it combination?
So back when I started in 2022, almost all of it was Twitter and some LinkedIn. And now it's diversified, I'd say, to Twitter, LinkedIn, Search Funder, referrals from former clients, referrals from M&A attorneys, quality of earnings providers, the Acquiring Minds podcast, and then just also the ETA conferences. So there are several or a handful of conferences, the Booth Kellogg conference in the fall, Harvard, Wharton, the Southeastern Conference, MIT, and just kind of a wide variety of places. But I'd say a lot now is Twitter and LinkedIn still, as well as referrals.
That's cool. So to kind of talk a little bit about the overlap, most of our franchisees seek out an SBA loan, and they got rid of the franchise directory, which I think I heard they're bringing it back recently. But most of our franchisees will seek out, even though they have the capital to buy the business, they want to hang on to that capital so that they could use it for growth and stuff like that, and so a lot of what you do, I mean, you're funding existing businesses, whereas the people who start a franchise with me are starting from scratch in their local market. But we do, I mean, almost all of our deals right now are done via SBA.
Yeah, and back to that comment. So yeah, the franchise registry, franchise directory, that goes back into effect on June 1st. So the question there for you is your franchise approved on there? And if so, then your franchisees are eligible for SBA financing. Yeah,
we were before it got like taken off. So I don't know why we wouldn't be if they brought it back.
If it was on there before, it should be on there now. Yeah.
Yeah. So what are some trends you're seeing? Like why, I guess like, so since you started in 2022, what has changed in the kind of like searcher community? Like what are some trends you've seen?
Yeah, so some of the biggest things I would say is there's more of a variance in quality of searcher from, low to high, whether that be from an experience standpoint or from a capitalization standpoint. So back when I started Pioneer back in 22, I would say the average searcher I spoke with, they were coming from investment banking, consulting, private equity, some of the Kevin air quotes blue chip type jobs where their capitalization or personal financial statement, they typically have at least $100,000. Maybe they're looking to bring in minority owners to the deal, but oftentimes they had a pretty decent personal financial statement. Now, as far as people I talk with on a day-to-day basis, since many people just go to my website to book a call, it ranges drastically from people with, $5,000 to $10,000 in their 3 years of college to someone where they're a principal at one of the blue chip consulting firms, maybe with upper six figures of liquidity and lots of P&L experience and kind of managing teams and people. So that's the biggest thing I've seen that's changed in the last 3 years.
Just the buyer pool has gotten larger because the risk appetite. Would you put that towards risk appetite? Maybe more.
I would say it's
yeah.
Yeah, not specifically. So I don't know if I specifically attribute it to risk appetite. I would say on social media, Instagram and TikTok specifically, not to name any names, there are certain people that, they push the zero money down, all seller financing. And so, you have people where they're scrolling TikTok or Instagram and they get this in their mind that, hey, anyone can go buy a business and put $0 in. It's not the case. It's not reality.
Yeah. So what advice would you give to someone who wants to become a searcher or a business owner to kind of stand out in the market?
Yeah, so the biggest advice I would say is like the first thing is, if you have capital, you have options as far as one, what percent of the business you own, two, lending options, basically how bankable you come across to different lenders, and credit terms as well. That kind of goes hand in hand. So you're going to have access to the more conservative lenders that will give better interest rates, options to things like lines of credit, which are very important. I would say one is, if you're right out of college, get at least like 5 years, ideally more of actual tangible work experience. Try to find an actual way to get some operating experience if you can, whether it's working in a blue collar business in a, maybe an HVAC company, if that's what you want to buy. Go ask your local HVAC owner, can you intern for them? Is there anything you can do to help so that you have some actual industry experience? And then aside from that, I would say, save as much as you can just to build your capital pool.
Got it. Generally speaking, what's the deal look like for someone who has $100,000? They're buying a $5 million business. They're utilizing the SBA. Like, break the deal down for me in a perfect world, or what the average deal might look like.
Yeah, so using the example, let's just say hypothetically the person isn't raising equity, just to keep the numbers simple. So let's say you have $100,000, and let's say of that $100,000, you want to keep 25 liquid post-acquisition, or maybe 20 liquid. In that scenario, so you have $80,000 to play with to buy a business, and just to keep numbers kind of vanilla, let's say the whole down payment's coming from cash, albeit now with the new SBA guidelines going into place June 1st, you could use the seller's on full standby for half of the down payment. If you take the $80,000, multiply that by 10, you get to a total budget of $800,000. Now, within that budget, you have other buckets of things. So you have closing costs, working capital, SBA fee, attorney, etc. Let's just say, give or take, you have $150,000 of other stuff, most of which is working capital and attorney, QV. You'd be looking at like a $650,000 purchase price. Now, in this scenario that you're bringing minority investors, minority owners to partner with you for the deal, in that circumstance, the size of the business that you can buy hinges on how much capital you can raise and what type of terms you're willing to give to those minority owners. So theoretically speaking, you could go buy massive business. Maybe it's an $8 million business, but you might have a lesser percentage of ownership. And so it depends on the equity step up and what you're offering.
Got it. So a searcher may end up only owning, like the larger the business gets, a minority of the company potentially?
Yeah. Well, generally speaking, Aaron, it's few and far between. I've seen people own like less than 60%. And unequivocally across the board, just based on the SBA requirements, they still have control. But to your point or to your question, the more capital that gets raised, the less equity they have.
Yep. So what are some of the changes, and what do you think? Yeah. So what are some of the changes that are coming other than the SBA directory, and how do you think that might impact the kind of ETA community?
Yeah, so some of the biggest changes recently, at least specific to the business buying space. So the first that kind of rolled back or came across in March pertained to the ownership of the business, and based on residency and citizenship, who cannot be in the ownership group for business acquisition. So as of now, essentially the first thing is 100% of the business needs to be owned by U.S. citizens or green card holders. And so that's kind of the first big change. As far as that goes, I don't think that's going to have a tidal wave effect. It's just going to reduce the amount of people that can be minority owners in the deal and contribute capital to these acquisitions because, supply and demand, just less dollars that can ultimately go in. The second thing that I think is going to impact things is on what's called the partial change of ownership. So in the new SBA guidelines that go into place June 1st, if you want to have a seller retain any ownership of the business whatsoever, whether it's 1%, 5%, 15%, that seller has to personally guarantee your SBA loan as a buyer for the full loan amount. So it could be $5 million for 2 years after closing. And so, yeah. So between 2023, yeah.
Whoa.
So, yeah. Yeah. So between 2023, when the guidelines changed last and now, buyers essentially, they would have, let's say hypothetically you, Aaron, were selling your business and perhaps you want to keep working, but you wanted to kind of take some economic chips off the table. Lots of sellers, or many, I would say, we're doing these partial change of ownerships where they're kind of hanging around to be able to work in the business, continuing on, and then at whatever future point in time, the buyer group or buyer individually would buy out their remaining equity. And so those are super popular. Now, one thing that I think is going to be even more challenging due to the removal of the partial change of ownership or rollover seller equity, pick your terminology, is on these deals with business licensing. So think about electrical contractor, HVAC, plumbing, anything like that. When it comes to who can be the qualifier for the license, it now gets more tricky because you have a couple of different options. So option one, let's say I'm Matthias and buying your electrical contractor business, Aaron, and I want you to be the qualifier of the license. That necessitates, if you're going to keep ownership in the business, I'm asking you to personally guarantee my SBA loan for 2 years. And that's, a monumental ask. The second way, huge ask. The second way is, sometimes there's an employer, multiple employees in the company that could be the qualifiers of the license. Now, that's something that banks I've seen have started warming up to. Generally speaking, one of two circumstances. Circumstance one is if the buyer is willing to do some sort of employee contract or sorts to retain them for a period of time where it's memorialized that they're going to stay on for X period of time until you as the buyer can become the qualifier of the license. Now, that's obviously a challenge for a couple different reasons, which I'll get to in a minute. The second, with having the employee be the qualifier, is if you bring them on. So let's say that, you, Aaron, are the key employee of the business, and you can qualify the electrical license or the HVAC or plumbing license. And I say, Aaron, I'll give you 2.5% ownership in the business so that you can be my qualifier for the license. Now, where this gets tricky is a couple different things from deal dynamics. Generally speaking, most sellers don't want to inform the employees that the business is being sold until further along because, take worst case scenario, the buyer doesn't get approved by the bank for the SBA financing. All of a sudden, the employees know you're planning to sell the business and transact, and they could be looking for jobs. They're wondering what's going on, and it just creates utter chaos. And I've heard disaster stories on various, Twitter or X as they call it now, and similar. So basically the question then is, how do you thread the needle? Because the bank wants to know who the qualifier will be, but oftentimes the buyer might not even know who that employee is until further along. And so you're trying to thread this needle. So the third way is some states allow for having an external qualifier where basically you have someone that's licensed and they essentially sponsor the license qualification. Different banks have different views on that for a couple different reasons. Is one, you're relying on someone else outside the business. The question is sketchy. It gets kind of sketchy. So the biggest thing I see with the partial change of ownership going away, or not going away, but just becoming more challenging, is the question is, will sellers or owners of these contractor businesses be able to ultimately sell their businesses and retire, or what's going to happen with those? Will those wind down? Will people lose jobs? If you're the seller, let's just say you could sell your business for $5 million, but based on the SBA banks and local laws and regs, you have to have someone in the ownership group be the qualifier. Can you stomach personally guaranteeing my $5 million SBA loan for 2 years? Or do you just ride off into the sunset?
That's wild. So, but that's only if they want to roll equity.
That's only if they want to roll equity. Yeah.
Right. So if they don't want to roll equity, doesn't matter. But how does this affect then sourcing equity deals? Because, like, if someone, going back to that searcher who has $100,000 and wants to put 80 into a deal, like if they, or let's say they want to buy a business that's $1.5 million, but they only have 80 grand, they got to raise another, whatever another 70 grand essentially.
Yeah.
Is that math right? So, that person who puts that additional money in, that minority investor now has to also personally guarantee the deal?
No. So in the scenario, like if we're talking about complete acquisition or complete buyout, the minority owner or investor would not need to be a personal guarantor if they're below 20%. Things get a little bit more convoluted if you're raising money from investors and if you're doing a partial buyout or partial buy-in, then the investors actually have to be co-borrowers. So it gets a little bit more complicated there. But for all purposes, I'm telling the clients I'm speaking with to not look to do the partial buy-in deals just because it gets too complicated now with the new guidelines.
Yeah. That's so interesting. So I'll give you a little bit of background. I did a deal, and my deal, I joke I was a searcher before I knew what a searcher was. But I was looking for a business specifically that I could franchise. So like it wasn't like I'm acquiring the brand, systems, processes, trademarks, and franchise rights, and the seller continues to own their business. And in return for them continuing to own their business and selling the franchise rights, they then are given equity in the new business that's being created, which is the franchise business. And then I invested in the franchise business. I raised capital in the franchise business. And then the founders of the original power washing company also invested in the franchise business. And we used the money there to grow the franchise system. So I call it franchise through acquisition instead of entrepreneurship through acquisition. And then we build basically a completely new company that didn't exist before, and the seller gets to own 100% of their company, and now they get to have a minority in a company that they didn't have before just because they built this great business.
Wow.
So that's the way we did it, and we grew it from one corporate owned unit to we now have 308 units across the country, and about 90 franchise owners who have joined. So it's been great.
Sounds like incredible growth. Congrats.
Thank you. Yeah, it's been wild. We closed the deal in January of 2023. I started searching in 2022 around July. Looked at about 24 businesses and ended up landing on this one. Largely, I liked that there were no licensing restrictions, around power washing. Generally, in most states, it was highly fragmented, not dominated by private equity yet. For like electrical and HVAC has been, and kind of a lot of opportunity to kind of become the biggest power washing brand in the world. But I say all that because like this kind of searcher community, it seems, at least based on what I've seen, that there are more searchers than there are businesses that are, I don't know if sellable is the right word, but like it
transactable.
Yeah. Yeah.
or SBA lendable.
Yes, that's it. Like theoretically every business is like transactable if the buyer is willing to if the seller is willing to jump through hoops to sell their business. But I don't know, is that what you've seen? Like, what's your perspective on that?
Yeah, I would say anecdotally that's true insofar as just the pure duration of time, Aaron, that takes many of these buyers to find a business to buy. And anecdotally, so back when I started Pioneer in 2022, some of the first folks I spoke with, June, July, August, some of them didn't close on acquisition until last year, early last year or mid last year. And part of that, I think, going back to just the sheer number of buyers, there's a question on, so there are a couple of different things that have happened in the last few years. So one is interest rates have risen a lot. So, prime used to be in the threes. As of the time of this podcast, it's 7.5%. And so banks typically lend at prime plus a spread over prime. And so I think there are businesses where there's misalignment on what financing structure to ultimately work based on the financials of the business due to interest rates having increased and price expectations being kind of static. So I'd say that's definitely something.
Yeah. I mean, there's definitely, I've seen that in the market, even on the franchisor side, is what people think their business is worth because of the transactions that's happened in the last, 21, 22, 23. It's just not that anymore because the cost of money's even more expensive. So how do you find qualified buyers to make sure that you and your team are working with kind of the best buyers that can actually get deals done? Because that's a long sales cycle for you, right? Like if you meet someone and it takes 2 years for them to close, it's a lot of infrastructure and support that you got to provide them.
Yeah. So I would say one way is, so as far as the vetting of the buyer, I would say, so our process typically kicks off with the engagement letter where someone acknowledges we're going to help them run point through the SBA financing process, build a deck for them that will be used to pitch banks, et cetera, et cetera. Before we agree to take someone on, typically we will vet out the personal financial statement. I'll have one of the analysts on my team look at the actual financials of the deal to figure out basically, does this financing structure what they want, is that supported based on the financials? And based on their resume combined with personal financial statement, combined with the debt structure, what does our spidey sense tell us, more or less?
Yeah.
And the larger the deal, so one more comment to sprinkle in there, Aaron, the larger the deal too, so sometimes people want to do what's called a pari passu deal, where they're going into SBA 7A, 5 million max plus conventional financing. So on those specific deals, and banks generally there want to see a stronger buyer, at least 6 figures of post-close liquidity, strong management experience, P&L oversight experience, and also I'd say debt coverage of 1.6 or above. So basically for the listeners, the earnings of the company divided by the proposed financing structure will yield 1.6 or higher when you do the math. For those deals, we'll generally pick 1 or 2 banks, sometimes to kind of run it by on an anonymized basis to get buy-in before the buyer ultimately ships off the LOI to get validation that the deal's going to be lendable from an SBA perspective. Because what we don't want is someone to go under LOI, their deal can't get funded, and then that comes back, on our marketplace reputation.
Right. Man, you've probably seen some crazy stories. Can you share any?
Yeah. So the financing process specifically, or
financing process, buyers, transactions, you know, the behind the curtain, this is what happens at a 5 million plus deal, or this is what happened with this person. Yeah. What have you seen? What can you share?
Yeah. So I guess, let me kind of look through my CRM here just to come to mind with some things that might be of interest here. So I have a guy, I've worked with people before where, they've been, I don't know why I'm laughing because this isn't funny. They've been in underwriting. It's typically the wife is, lots of the buyers I work with are guys, not to overgeneralize, but it's just what I see a lot. Spouse files for divorce, posts in underwriting or closing, and things just kind of get kicked down. Financials need to get updated. The whole closing checklist changes. So I'd say like one thing that can delay these deals is divorce. So keep your spouse,
delays a lot of things, I hear.
If you're buying a business, keep your spouse happy. Like that. That's one of the biggest words. That's one of the biggest words of advice I can give to anyone watching this. So that's one thing I've seen. I had a deal before where the sellers were two former college roommates that like hated each other, and the sell side of the deal, it was like the buyer had to talk to each of the sellers separately because they wouldn't talk to each other. I've had a deal where things kind of spiraled out of control from a communication standpoint between the buyer and the seller. And there was a deal that had a signed purchase agreement. It was going to consummate. And the lender basically had to broker the new deal between the buyer and the seller, like the whole structure and everything.
Wow.
Yeah, there's a lot that goes on. It gets pretty interesting.
How does real estate get involved in a lot of these SBA deals? Because I know that's a whole different ballgame. Like, are you getting like a commercial mortgage lender on some of the real estate, or is it part of the SBA? Like, how does it all work?
Yeah, so what I'd say, or to answer your question, so if you're buying a business with real estate, assuming that you have the option to buy them independently, so sometimes the seller says, I want to sell both together. Okay, fine. But under the first option, if you can buy both independently of each other, you could either buy the business with the real estate, in which case you could do, SBA financing potentially to buy both of them. Perhaps, in which case, so in that circumstance, not to get too much into the weeds, you could do a blended loan term and amortization, or you could do two separate financings, one SBA loan for the business, another for the real estate. In that circumstance, there's both the SBA 7A loan program, or you could do 7A for the business, 504 for the building. You can also do a lease with an option to purchase on the real estate. So maybe you have the option to be the first buyer on the real estate for the first X duration of time post-closing. And then at that point in time, you go and you buy the real estate. And there's reasons to do that from the SBA financing standpoint, things around down payment and just more accommodation as to not needing to bring as much capital to the acquisition of the real estate at a future point in time. You could also potentially buy the business with an SBA loan and then later use a conventional loan from a commercial bank or local community bank to buy the real estate. You could also bring in a sale to lease back firm to basically buy the building and lease it back to you as a buyer. I've seen people do that as well. So there are lots of different things you can do. What I typically tell people is on the margin, when you're thinking about buying the building and or just buying the business, not buying the building, the question is, in the market where your business is, what are your options to relocate the business if you don't buy the building? So say you're buying an HVAC company or something with lots of the service vans, are there lots of these other properties in your market? What do rent terms look like? How much of a pain in the ass will it be to move the business, which I think some people really discount. And just thinking about that from an operational disruption on, you're running your company, maybe you and the landlord can't come to terms. Sometimes the landlord wants to repurpose the building to redevelop it or do something else with it. So there are lots of different kind of paths you can shoot down on. And that's where you really kind of have to do some calculus and maybe do some, evaluation of the local commercial real estate market, talk to a couple of people and figure out what's prudent to do.
Got it. So what's the kind of plan long term for Pioneer? Like, what you started it? What is the plan kind of to grow it? How's that going? Are you ahead of schedule, behind?
Yeah, it's definitely a loaded question. I would say so. Plans kind of evolve like chutes and ladders, as I'm sure you know, being a fellow business owner. Currently, the plan is, I would like Pioneer to be the equivalent of the Apple or the Amazon in the SBA loan consulting space, where when people think about buying a business, much in the way that people might think about Live Oak Bank or similar as the kind of front runner in the business buying SBA financing space, I want people to think about Pioneer in the same way. And so currently we're trying to do everything that we can to really be a thought leader in this space, trying to put content out that's useful to buyers so that they could be strategic about how they structure their deals and really trying to minimize friction points in the financing process, whether it's having a cash flow deck that's really analytical and built out to detail add backs, source and use, and the nuance in the transaction for the buyer to make things go all with the bank. Back to your question, currently so we have 2 salespeople, my chief operating officer, and 3 analysts. So I would say as deal volume increases, would be adding more headcount or more technology and resources to be able to scale accordingly. But within the SBA loan program, there's 504 loans. There are other things that you can do too. So trying to really feel at the market to figure out, are lots of people buying commercial real estate? Should we become experts in 504? There are other things too, like USDA for rural businesses, different places we could branch out to as well. And really trying to figure out, based on where the puck is going to what makes sense. I know that doesn't directly answer your question, but the short answer is, my vision changes a little bit day by day or week by week based on what's happening. And right now there's a lot happening in the SBA space. So you might wake up in the morning and feel really good about things, and then you see new updates come across the transom, and your mental state shifts a little bit. So
what should buyers look for in banks? And maybe a better question is like, what do you look for in banks that you partner with? And then what should like a searcher kind of think about as they think of a bank to partner with?
Yeah, no, I'd say first of all, I like to use the phrase business buyer instead of searcher, just because I think, we're all kind of searchers philosophically, right? Not to kind of reminisce here. But I'd say business buyers, what I think they should look for in a bank, so there are kind of 2 sides to getting the deal done. So like one is the financing process to close, but then there's the portfolio management. And so the first thing I would say is, what is the actual post-approval closing process going to look like? Does the bank have a very experienced closing team where the closers at the bank understand, the nuance of purchase agreements? Who is the law firm that the bank works with? Not all bank legal counsels are created equally, unfortunately. So I would say ask around there, poke around Search Funder, poke around Twitter to kind of ferret out based on who the bank attorney firm is. Is that something you can get comfortable with? Does the bank use DocuSign, or are they still a pen and paper bank? I work with banks in both camps, some which will take longer to migrate than others. How many business acquisition deals does the bank do per year? What size deal do they typically do? And do they have a maximum unsecured amount that they're willing to finance? So I would group banks into two different camps. There are banks where they're very much focused on the cash flow of the business and thinking about if the cash flow of the business is strong, if the buyer is a sharp operator, if they have good post-close liquidity and a good business plan, things should hopefully go well, even with them being the exogenous factor entering the equation. And so those specific banks, Aaron, I would say even on larger deals, they're not opposed to financing them if all the stars align, the boxes are checked. But then there are banks where, if you're looking for more than $1.5 million, $2 million, sometimes $3 million unsecured, where there's just the GBSA, so the lien on the business assets, and there's no hard collateral, the people at the banks with the gray hairs start to get the wrenches in their stomach and they just don't get comfortable. So that's one thing I would say. Another thing is really understanding after you close in the business and you get the financing from the bank for the SBA loan, does the bank have a portfolio management team? And is that internal or is that external? Much in the way that some of these, some business owners outsource CFO, accounting, things of that, just from a cost standpoint, some banks, instead of having their own internal team that does portfolio management, they might outsource it to a different firm that manages that for them. And there you can have kind of a whole menu of experiences, if you will. So those are a couple of factors, I'd say.
And so how many different banks do you work with at Pioneer?
Yeah, so we have referral agreements, I want to say signed with about 30 banks or so. I would say there's probably 12 to 13 that we work with more routinely. And that typically kind of hinges on the fact that specific banks are more familiar with these business buyer plus minority owner equity raised deals where they're more true cash flow lenders and less focus on collateral and unsecured loan amounts, if that helps.
Yeah, that makes sense, because you're really, if the bank needs the collateral of the business to be able to repo the business versus the cash flow, it's a completely different thing when you're buying a business to grow it.
Right.
How do you think about working capital? Like, so let's say you give a business plan, you buy a $5 million business, or but you need to get that business from $5 million to $15 million. You need a lot more cash than the EBITDA of that business. Like, right? I mean, like if you've got, let's say it's $1 million, I don't know, that would be a great business. But you see what I'm saying? Like, you're going to need more capital to inject. So is that built into the business plan? Does the SBA fund that? Is that supposed to come from, private investors, or like, where's that kind of built into the loan?
Yeah, so there are kind of four different ways that you can really capitalize an acquisition, Aaron. So the first thing I would say to anyone watching this podcast, if you're buying a business, is think deeply about getting financial diligence from an established quality of earnings report provider. There are lots of different ones out there. A couple names, not to kind of advertise for anyone. So Midwest CPA, Hollywell, Builders CPA, now Edler Zane, Hood and Strong, the list kind of goes on. Get the quality of earnings report to work with someone that can help you with validating if you have enough working capital in the business. But back to your question, so if you're buying a business with SBA financing, the different ways you can get working capital, the first and foremost is to have a net working capital tag in the LOI where it establishes during diligence, you and the seller will come to agreement on a number that gets validated by the Q of E report, and you're going to get X amount of working capital. They'll be agreed upon post at closing, consisting typically between cash, accounts receivable, inventory, etc. The other ways you can get working capital, so one is most banks, not all, will provide what's called an SBA Express line of credit. Those go up to $500,000. If you're buying a business where you're maxing out the Express line of credit, basically whatever you're getting from the Express line of credit for the amount or maximum amount, plus the SBA 7A loan for the acquisition, those combined can't exceed $5 million. So just one thing to keep in mind for listeners of this episode. The third way is most banks will finance in to the SBA loan working capital, so basically cash to the balance sheet that gets ACH or wired to the operating account day of closing. Most banks won't lend more working capital than the down payment amount because it looks like you're basically just getting the down payment kicked back to you. Mm-hmm. And then the last way is to raise additional equity from minority owners or investors to deploy additional cash to the balance sheet over and above the amount you're getting from avenues 1, 2, and 3, if that helps.
Yeah, that's helpful. So what's the average deal that you see? Like what's the average deal size?
Yeah, I would say average deal size, it's definitely going up. It's generally somewhere in the neighborhood of 3 million, give or take, somewhere in there.
Yep. That's interesting because like when I think about like a $3 to $5 million business, like to get a $3 to $5 million business to like a $10 to $15 million business is a whole different ballgame. And oftentimes, at least what I've seen in the franchise industry, like the guy who can build a $3 million business not necessarily is capable of building a $15 million business. And he's burnt out because he's got to take all of the money that he's probably living off of and having, quality of life based on, and reinvest that and more into it to get it to that next size. Is that like, what do you see? I mean, do you see bigger deals, or are they typically in that kind of range because that's where the private equity doesn't play as much, or like, what do you attribute that to?
Yeah, so I do have some bigger ones for sure. So I have one in post-approval closing now where it's $5 million from the SBA plus $3 million conventional. I want to say, I'd have to go back and look to give precise numbers, but somewhere around like 9 to 10 purchase price plus minus. So a pretty substantial amount of equity going in. But I would say, so the question, just to make sure I'm tracking with you, is what's causing deals to get bigger, right?
So my question is, like what's causing, because you need more cash to grow. So tell me what do you think is causing deals to get bigger?
So I would say a combination of things. So one is, so the number of entrants to the business buying space is going up every day. And based on my spidey sense, I could be wrong here, Aaron. I'm just a guy. Based on my spidey sense, the number of businesses being listed for sale is not increasing at the same propensity or velocity as the number of new entrants to the space. So that's kind of one element. I would say another element is private equity companies that are coming further down market to be able to do platform add-ons. And then you add in the independent sponsor model separate from the SBA finance model. And those things, that combination of factors, I think, has really driven up multiples.
Yep, that makes sense. So I hear, are you in Canada? I hear a boot. Or am I mishearing that?
No, you're definitely hearing something. So, my parents are both born in Canada.
Okay.
I was born in Massachusetts, then moved to Michigan. I picked up on some Canadian, just I guess, dialects while I've visited Canada before.
That makes sense. So you live in Michigan now?
No, so I'm based in Madison, Wisconsin currently.
Okay.
So I've
cool.
I've been here for the last 15 years.
And married, kids?
Married, no kids yet. Sometime down the road would like to have kids.
Nice. Very cool. What does Is your spouse an entrepreneur?
My spouse is not an entrepreneur. She's in the accounting construction space.
Nice. So what, why'd you decide to start this business? Like, I always like to ask entrepreneurs that, like, what motivated you?
Yeah, so I would say a couple of things. So one was I just really like the energy of, business, entrepreneurship. So to kind of go back in time, back when I lived in Michigan, when I was 7 or 8, it was sometime around then, me and my friend growing up, Carson, kind of from around that age, we were trying to hustle and make some money. And so essentially I asked my mom at the time, can we buy bottled water and sell it at the art fair? And so basically, we went to Kroger or Meijer, loaded up a bottle of water, walked around with a red wagon, and basically sold water for $1 a pop. And so I just always really liked, understanding the various aspects of business, entrepreneurship, and similar. And so professionally, starting back from college to leaving and start Pioneer, I'll kind of way back to your question. As working at banks as a closer, basically seeing all these different deals getting done, whether it was a circuit board manufacturing company, self-storage, HVAC, and similar. And one thing I noticed was, lots of these buyers, they never really had anyone that was helping them go through the financing process. And so there's lots of confusion, like just from a process flow standpoint, and or the people that were involved in helping them. SBA wasn't really their first language, so maybe they came from a different space. They're working commercial lending, but not SBA, or they're doing fractional CFO stuff, or they were just, so old, candidly, that they hadn't really evolved with the program. And so I kind of saw from the seat I was in, there's a space or an industry of people where they're helping facilitate the SBA financing process for these buyers, but they're just, it felt clunky. And so around that point in time, I had gotten introduced to the business buying Twitter space from an attorney that I used to work with back when I was at Live Oak Bank and Byline Bank. This is a guy named Scott Oliver, who's a partner at a law firm in Indianapolis called Lewis and Kappas. And so basically I started posting on Twitter shortly after he introduced me to the space, was generating all this content on, HELOC, this and that, business plan fundamentals that banks want to see, thinking about projections and just various tidbits of SBA knowledge. And I had people start reaching out to me in the DMs on Twitter, now X, asking just different questions on SBA financing, kept both technical things, and ultimately just looking to connect generally, looking for financing for their deals. This generated basically me connecting certain people on Twitter to the bank I was at the time, and basically generating deal flow for the bank. And so halfway through my time at the bank, essentially, I made the mistake of retweeting a tweet from the bank's Twitter account. My compliance department via my marketing department caught in my Twitter activity, kind of had a come to Jesus call with me, asked me to basically vet my stuff by them first before posting it, which prompted me to put a pinned tweet or disclaimer on my Twitter, basically explain that everything I was posting on my Twitter had no affiliation with my bank. It was just my own personal thoughts and views. And so I kept posting, kept tweeting, get to my 2-month review, first week of May of 2022. And my boss basically tells me during my 2-month review, you're kicking butt at your job, keep it up. Everyone likes working with you. But we either need you off of Twitter or we need you to stop posting about banking, SBA, and acquisitions unless you want to vet your stuff by us first for compliance purposes. Because there is a concern that if someone's deal went sideways, they'd point back to my content and say, this guy at your bank or told you to do this and it's your fault. It would cause issues. So very shortly after this, just by timing coincidences, I had a trip planned with my wife to go to Greece, and this trip had been planned well in advance. I think it was August or September of the prior year, so 2021, we bought the plane tickets. And so we're in Greece, May of 2022, and at the time I was 28, turning 29 on that trip. I was thinking to myself, here's this market that's taking off in the business buying space. there are all these folks that want to acquire these small to medium-sized businesses. I saw folks like Eric, now at SBA Law Group, spinning up his firm. The QV guys kept getting into the space. People like Connor Bean starting his firm, Skillable CFO. And I thought, why not start a firm to help these buyers on social media, Twitter, Search Funder, and LinkedIn go through the SBA financing process. And when you're on vacation, or at least when I was on vacation, I had a super clear mind, just kind of blank slate, open to doing new things. And I kind of thought, why not do this now and take the leap? And so I jumped at it. Now we're here.
That's awesome, man. I love that. I love those kind of stories. I'll share something similar. So I was working at a private equity backed restoration company that owned multiple different franchises, and I was helping grow those franchise brands, creating content, going and speaking at different franchise events, and had grown two brands to be, or worked at two brands and helped grow them to be the largest brand in that category. Both, it started with carpet and floor cleaning, then it was drywall repair, and we grew those companies by over 400 units in 5 years. And they were like, hey, we love what you're doing. We want to put you on track kind of for C-suite. We want to give you another brand, but like more or less, like you got to do it the way we want you to do it. And like, we'll give you the capital you need to go towards it, but like, you got to do it how we want you to do it. And I was like, I can do this on my own.
Right.
I could find a brand. I could turn it into a business, like a franchise. Like I could do it on my own. And so I turned it down, and had, some moments of clarity as well. Like, wait. So I went to my wife, who was at the time 6 months pregnant with our second child. And I was like, all right, so I got this great job offer. I got this great job offer. They want to pay me all this money. All I got to do is keep doing what I'm doing now, just with another brand. Or, hear me out, I want to find a business to franchise, do it on my own.
Now you're here.
Before.
I'm guessing, you probably did not end up taking it.
I did not. No,
right.
Yeah, I convinced my wife. She said, I know you'll take care of us. Go do what you want to do. And so it's funny, man. I was working as like one of the VPs essentially at the company, and I created this separate company because I couldn't just be like Aaron the dude looking to like franchise a business. Like I had to have a name and like a website and stuff, which I'm sure your searchers or business buyers as well, like probably think through is like, how am I'm not just, so I created a company, and I'm on a meeting with my boss. And he's like, Aaron, I can't find the email that you sent me. He's like scrolling through, and I'm like, I sent it.
Mm-hmm.
And he checks junk, and he's like, Aaron, what's franchise overdrive? And that was I accidentally emailed my boss from the email that like, and he goes, do we need to have and I was on with like the other VPs of the company. Do we need to have a conversation after this meeting? And I was like, yeah, we definitely have to have a conversation after this meeting. So I'm like sitting there sweating bullets. Like it's clearly awkward with the other VPs. They're like, what's going on? And at the end of the meeting, I was like, listen, like I'm super appreciative of the job that you've offered me. I just want to go be a business owner. I'm going to find a brand. I didn't want to tell you until I had the brand. Like I need to go find it. It's not going to compete with any of the other brands here. And he was like, I'm just glad you're not going to go work for someone else. I can't fault you for wanting to be a business owner. But a month later, I had not closed the deal yet, and his boss ended up letting me go. And so I had a wife that was 7 months pregnant. I hadn't finalized the deal yet. I hadn't raised the capital yet. And that was October of 22. So it was like race to the finish line to get it done in January. And everything that could have gone wrong went wrong. But anyways, that's a little bit about my story.
Crazy. Yeah, I mean, looking back at it, like the first the first few months of starting any business is wild. Like I remember I got my last paycheck. It was like early May, and I'd got a signing bonus from the bank I was at, and it wasn't anything significant. It was like it was upper single digit thousands, and I remember having to pay back like a good portion of it. So I get back from vacation after I turn my equipment and send my signing bonus back, and then essentially it wasn't until mid-September-ish of 2022 that I generated my first deal closing, and it was like mid $10,000, and it's like, you're shitting bricks because it's like, this is real, right? It has to work.
I talk a lot about like burning the boats. Like there's a lot of franchise investors or franchisees that want to join the franchise industry and kind of like buy it and like have someone else run it, and like they'll keep their job or they'll go buy another business, or like they have this kind of idea. And I'm like, no. Like it doesn't matter whether it's a franchise or a $5 million HVAC business. Like you go all in to make the business work because it's going to take everything out of you. And also your competitors are going to beat you because they're going all in on it. And it's just so business is so hard that you have to give it your everything. And so when I was like let go, like I had no other option. The boats were burned. Like I knew, based on the money that I had to invest, I invested my own money. I'm the biggest investor in the brand. I knew what the runway was until we needed to get profitable. And it was like, no matter what. So I started investing tens of thousands of dollars of my own money, pretending as if I was running the company and owned the company before the deal was even closed, doing brand refreshes, logos, building training programs, like all of the stuff that goes into to building a business before the deal was even closed, because I knew that we needed a franchise disclosure document filed by February. We needed to sell our first unit in March or April. And that was like, it was like laser focused, burn the boats. We're going all in.
Yeah, I think that's something that very few people talk about, like when it comes to starting a business, is just the initial capitalization. And like one thing, knock on wood, that I'm super thankful for is like I've generally like had propensity to be a saver. Going back to the pandemic when I was at one of my former employers, I was salaried non-exempt. So during, the PPP round one and part of round two, people were working like 80 plus hours a week getting overtime. And at the time I was living in a townhouse with like a pretty low mortgage, rates were super low, kind of at the bottom. And I was just throwing money into the stock market and just letting it ride. But that was a lifeline when it came to starting my business, just having that for a pretty good amount of initial capitalization.
Yeah, I think that's a great piece of advice for listeners who are thinking about buying a business, is like, just put as much money as you possibly can, live, modestly, so because the business will need, what does it say, double as much as you think it's going to need, if not more than that. So, yeah, no, I think that's great. Awesome. Well, Matthias, where can people find you if they want to learn more about Pioneer, or they want to follow your content or anything like that?
Yeah, no, for sure. Thanks for asking, Aaron. So the best or kind of most logical place would be our website, so pioneercap.com. I'm also fairly active on LinkedIn, so just under my name, Matthias Smith, as well as Twitter, now X, and my handle on there is at SBA_Matthias. So those would probably be the best three places.
Awesome. Well, thanks so much for coming on and teaching me so much about kind of business buying and the SBA process. This has been great for me, and I know that the listeners will get a lot of value from this as well.
Definitely appreciate you having me on here, Aaron.
Awesome. Thanks. See you next time.
Yep. Cheers.